What if I told you that the recent crypto market optimism we've all felt might have been nothing but a short-lived illusion? Today's top stories are shaking up the space, and not in a subtle way. BNB just dipped below $750, signaling a wave of sell-offs that could send the entire market reeling. Bitcoin? Analysts say it might need to go lower before it goes anywhere near 100K, and that 113K target? It's already slipping from the narrative. Meanwhile, Coinbase is making a bold move that could simplify Web3 forever if it works. These aren't just updates, they're warnings, opportunities, and shifts you can't afford to ignore. So stay tuned, smash that subscribe button, and let's break it all down. BNB's recent plunge below $750 has triggered alarms across the crypto community. Just days ago, market sentiment was riding high. Corporations were embracing crypto, and investor optimism was surging. But like a sudden storm on a clear day, the mood shifted. The broader market started bleeding red, and BNB, once resilient, amid turbulence, took a sharp turn downward. This drop isn't just a random blip, it's part of a larger trend. The sell-off we're seeing now was likely brewing beneath the surface for weeks. Analysts have pointed out that leveraged positions had built up, creating a fragile foundation that only needed a slight shake to collapse, and shake it did. BNB, being heavily tied to Binance's overall health, often acts as a barometer for sentiment around centralized exchange ecosystems. Its fall reflects deeper concerns: regulatory uncertainty, fear of overexposure, and diminishing short-term confidence. Now, what's fascinating is the timing. We were just starting to see legacy institutions dipping their toes into crypto again. Partnerships, integrations, positive headlines. But that optimism might have been overhyped or worse, strategically timed exit liquidity for big players. Retail investors jumped in late, and as always, they're the ones feeling the sting now. From a technical standpoint, BNB breaking below key support levels could trigger further downside. Some traders are now eyeing the $700 and even $680 zones as next possible floors, and if macroeconomic data continues to spook risk markets, crypto won't be spared. So what's the takeaway? Don't blindly trust bullish narratives without watching market structure. BNB's fall is a wake-up call. Speaking of market structure, let's talk Bitcoin. The king of crypto is sending mixed signals again, but according to some of the sharpest analysts out there, we might be heading lower before anything meaningful happens. Bitcoin's price is still hovering around the 57K to 59K range at the time of this recording, but the chatter is growing around one idea. This is a classic fake-out. Many believed 113K was on the horizon, especially after the last halving. But now that target is becoming less of a promise and more of a fading dream, at least in the short term. Why? For starters, Bitcoin's current price action shows signs of exhaustion. Momentum indicators are weakening, and there's strong resistance above 60K that just doesn't want to break. Add to that the global economic uncertainty, rising interest rates, inflationary fears, and geopolitical tensions, and you've got a perfect storm for hesitation. Some analysts are even pointing to on-chain data showing long-term holders beginning to trim their positions. That's never a good sign. When OGs start taking profits, it usually means they're anticipating turbulence. But here's where it gets tricky. This pullback might be necessary. The market needs to flush out the weak hands and reset before the next true leg up. If BTC can find support around 54K or even 50K and consolidate there, we might see a much healthier rally later in the year. However, if those levels break with volume, things could get ugly fast. So the question becomes, is Bitcoin taking a breather, or is it heading into a new phase of decline? Personally, I lean toward the idea that we're entering a recalibration period, not a collapse, but as always, caution is king. And while the market wrestles with uncertainty, Coinbase is taking matters into its own hands. In a bold move to accelerate Web3 adoption, the platform just announced the addition of embedded wallets to its development stack, At first glance, this might seem like a technical detail, but the implications? Huge. Embedded wallets are designed to remove the complex onboarding process that has plagued Web3 since its inception. No more seed phrases, no more confusing interfaces. Developers can now integrate wallets directly into their dApps, making user sign-up as simple as logging into a website. Think about how transformative that is. One of the biggest bottlenecks for mass crypto adoption has always been UX, user experience. The average person doesn't want to memorize a 24-word seed, phrase, download a browser extension, or figure out how to bridge assets across chains. They want something that works, instantly and intuitively. That's what Coinbase is trying to deliver here, and by offering these embedded wallets as part of their dev tools, they're not just making life easier for users, they're empowering developers to create more seamless, accessible products. Of course, there are critics. Some say this move compromises decentralization. Others worry about security risks. But let's be real. If we want billions of people using Web3, we need to make it stupid simple. Coinbase is betting that convenience will outweigh the purest ideals, and honestly, they might be right. This could be the spark that lights the fire for the next wave of Web3 growth. Whether you love or hate centralized platforms, they still hold the keys to mainstream adoption, and Coinbase just opened a very big door. So where does that leave us today? We're standing at a crossroads. BNB's sudden drop reminds us that the market is still fragile, and no amount of bullish PR can mask underlying weaknesses. Bitcoin's hesitation tells us that patience is essential and that short-term pain may be the price for long-term gain, and Coinbase's push into embedded wallets proves that innovation is still alive, even if it comes from a centralized source. Here's what I want to know from you. Do you think this dip is just a shakeout before the next rally, or are we in for a deeper correction? Is Coinbase helping or hurting the Web3 movement with their new embedded wallets? And how are you personally navigating these market conditions? Let's get the conversation going in the comments. I'll be reading and replying. If you found value in today's breakdown, make sure to hit that like button so more people can find this content. Subscribe to the channel if you haven't yet, and tap the notification bell so you never miss a beat in this fast-moving space. I'll be back soon with more updates, insights, and analysis. Stay sharp, stay informed, and as always, stay curious.